All right, the stock market is going parabolic. It is Thursday. It is May 7th. My name is Evan, and I am here to talk a little more process, so some education in today's video. I'm going to look a little bit at markets and where we might be able to find some opportunity if you're still looking for more long ideas. But I want to talk about a process question, which is trading parabolic markets like we're in. It's very timely. I spent some of my hours this week talking with some traders that are effectively frozen in this market. It has moved up too fast. They can't bring themselves to sort of take action or put on more longs. And so, or even stay in the longs that they're in. And I want to talk about process on how we do it here. So let's look at our momentum model first. Quant Rockets, which has hit 40 targets this week alone. It is absolutely one of the best periods for this trading system I have ever seen. And it was really designed for this type of system. I wish all market environments were like this. They aren't, but this has been a monster week, month, couple of weeks here for Rockets. I want to show you Modine first. So here's the way we structure every trade with our momentum swing trading model. When we enter a trade, we have a stop loss. We have an initial exit zone. Let's say it's $10 below our entry price. Then what we do is we say, okay, $10 is our R, is our risk. And the way we structure profit targets is simply taking R multiples. They can be a little cute and kind of line them up with nice, prior resistance areas or, Fibonacci, whatever you want to do. But keep it simple initially. If you're risking $10 on your trade, a 2R target is $20, $20 above your entry. This is effectively what we do here with multiple profit targets in our Rocket system. We also are continuing to adjust our stop loss, right? We have an initial exit price and then it continues to adjust based on the behavior of the trade. And so for Modine here, this has actually been a sluggish performer. This has been on the list for 29 days. We've owned it. It hasn't even hit our first target. But what you'll see here is that our entry price, which was at 227.41, is actually now below our exit trailing stop, let's call it, to use more trader-friendly language, up at 240.75. So what we have effectively done here is just progressively inched up our stop loss, which is helping protect profit and reduce risk in the trade while we're keeping our fixed target. Let me show you another example. Let me show you SOXL, which is just, I don't know, a rocket ship. I don't know what the best analogy is, but this is up 140 odd percent in a month. Entry was at 66.31. The current exit is 102. So what we're doing slowly over time is just inching up that trailing stop loss. But if you look on the right-hand side here, you can see we have 5 profit targets. We have hit all 5 targets. So at this point, SOXL is approximately a third of the position size it was when we initially purchased it. So basically, we have harvested a lot of the size and risk out of the trade. We have locked in gains at these R multiple tiers, and then our stop loss is continuing to inch up. So you've got this dual sort of, risk management position, kind of controlled profit harvesting as the stock has gone higher. All right, so pretty straightforward. I mean, it's what most traders would do. We just do it in a very mechanical process. There's no emotion. There's no waking up thinking, gee, where do I sell or should I sell today? No, we have a structured process that tells us, okay, here are our 5 profit targets, which that might be too many for some folks. Maybe you only like to use 2 or 3 targets. It's totally fine. Just showing the process we have here. And we sell 15% at each target, which by the time you're done, you get about a third of a position size left. So SOXL, a third is left, call it a runner. And our exit price is just continuing to ratchet higher. And now we just shoot for the moon and we wait until we get stopped out on a trail. Light, you can see same thing here. Light has hit all 5 targets. And today it is coming into our exit zone. So it might finally be for the remaining 1/3 an exit for us. I said I would talk about some opportunity software. I did a video on some software stocks that were starting to show up on the list. Software is getting a little bit of pep here now in the market. Datadog talked about it. This actually swept two profit targets today, our first and second, and then by the time tomorrow, this exit zone is probably going to jump up. Rubric talked about this one. It's been a slow mover. It's still going towards our first target, but look where our exit zone is today. If you watch the original video, you'll see our exit zone was much lower. And Duolingo, this one here, kind of coming into our first profit target after some volatility. It almost stopped us out, turned on a dime, and it's coming into our first target here. So those three names we talked about as trade ideas just about a week ago. So I wanted to just highlight that. Where else am I seeing opportunity? So software land, IGV, you can see it starting to ratchet up and break out. And I would say another spot for rotation, which I don't know if I give myself probably a C on this trade. I talked about Bitcoin 2 weeks ago as a spot to pay attention to. And I was saying around 77. So I was early in the trade, but I was expecting that we would squeeze much quicker here, and we are still kind of floundering. We're in pullback mode. So I'm still bullish on Bitcoin, but I am a little frustrated that it didn't give it as much of a oomph squeeze as I thought it could. Maybe this is the last little shakeout before a move, but I think software is getting some love because these stocks are not so extended, and maybe you get that, kind of move spill over down into crypto land, especially as clarity starts to get through the finish line here, and you get more risk appetite where folks are quite happy. All is to say, it has been a very comfy, enjoyable market here on the long side. So the point of this video is have a process. Here's how you can trade some parabolic stocks and stay in those parabolic stocks by reducing size into strength, inching up your stop loss, and reducing that risk as the stock moves up. And it allows you to kind of stay in the trade, but take the size off the table. I think at this point, we are very long in the tooth on all metrics here. So if you're putting fresh capital to work, just be aware of where the market regime is. I think, again, the software side is the more speculative, maybe rotation in it, but it's speculative. And then same thing on crypto. It hasn't led this market at all. But if you do start to get money coming out of hardware and tech hardware and infrastructure, then maybe you find a little bit of renewed energy here. So that is it. Hopefully this helps. Hopefully you have been able to capture at least some of the profits here on this move. Tomorrow is Stock Market Weekly. We will be back with a full dive on the market and where we're seeing things going. So tune back in tomorrow. Thanks so much for watching. See you in the next episode.